Now, let's talk about how do you identify a trend in the market. But before we do that, obviously, we need to answer the question, what is a trend, right? A trend is a short-term direction of the market, or the trend is generally the direction where the price is going. When you look into this market, we can all agree that this market have points when it have been moving to the downside. You can see that this market was moving to the downside. In this case, you can see that this market was moving, not going to the upside, not going to the downside. But in this case, you can see that it was moving to the upside. In this case, again, it was moving to the downside. And what does this mean? This is what is called a trend, right? And a trend is generally the direction of the market in that particular time that you go into the market. So whenever you open your charts, the first thing that you want to be able to see is a trend, right? A trend is the first thing that you need to see in the market. You need to know the general direction of the market. The reason why you need to see a trend in the market is, number one, you don't want to trade against the direction of the market. Most of the time, especially as a beginner trader, you don't want to oppose the trade. For example, let's say you were here and then you saw this market was moving to the downside, was moving strongly to the downside. So let's say, for example, you are here and you want to place your trade. What is the first thing that comes to your mind? You are going to think, am I going to buy or am I going to sell right here? So you might think, okay, since this market has been moving to the downside, I just need to sell and then I need to buy and then the market will reverse because the market has been moving to the downside. So let me buy and let me see if the market can reverse. And sometimes it happens, but most of the time, more than not, you are going to keep losing money because the market is just going to follow the trend, right? The market is just going to keep going where it has been going because there's a lot of force most of the time that is pushing the prices to the upside and to the downside. So when the price is moving, let's say to the upside, that means there's a lot of buyers in the market that are participating, that are willing to keep buying. That's why the market is keep going to the upside. And then if the market is going to the downside, that means there might be sellers in the market that are willing to keep selling, and the economic factors of those countries might mean that they can continue going to the downside. So that is why you just want to continue with the trend. So the first thing that you need to do in the market is being able to identify the trend. So how do you identify the trend? There's two ways that I want to teach you right here. The first way is using candlestick patterns. Now, if you were listening carefully in our first lesson, we talked about if the market or if the candlestick is green, that means the market is in an upward direction. That means the closing price of the candle is above the opening price. So there's momentum for the market to keep going to the upside. And this is what I mean. So right now, if we look at the last candle that we got here, this market looks like it has been trying to move to the upside, at least for the last, so this is the 5-minute time frame. So at least for the last 10 minutes, because we have 5 minutes here, the market is pushing to the upside. We have another 5 minutes here where the market is pushing to the upside. For the last 10 minutes, the market has been trying to push to the upside. So there's more convincing. It is more convincing that the next candle that is going to come up here is going to go to the upside, because the last two candles is showing up that the market has been trending to the upside for the last 10 minutes. So let's see if the next candle that comes up here manages to be another green candle, because this market has been moving to the upside. So let's see what happens next, right? So we can see that we have another candle here, and this candle is pushing also to the upside. So this first candle and this second candle was showing us that the market has been in high momentum, right? So, but for you to get the best out of this technique, if you want to use candlesticks, you don't want to just say, since the last candle was green, the next candle is obviously going to be green. It's not always going to be the case, right? But you can use this in 2 time frames, right? So here we are in a 5-minute time frame, right? If I click here, I am in a 5-minute time frame. So let's change this to 1-minute time frame. So now what I'm going to do here is I want just to mark up this zone so that we will remember it, right? So from this zone right here, so let's do 2 markings right here. I don't usually do this when trading, but I want you to understand this. So here is where we are. So we are between this zone here. So our next candle that comes up here is likely going to be a green candle. So this is going to be likely a short-term uptrend. So if it is a green candle, it might be just very small. It might not be very big, but it can move from here to here. But this is not a very small portion here. If we go to 5 minutes and if you go to time frames and go to 1-minute time frame, you can see that we were here, right? So we started right here. And the market is already going to the upside, right? So from here, we are here, right? This is where we are. And we are expecting prices to move to the upside. But now this gap has just gone bigger because we are in a 1-minute time frame. So to identify this trend, we want to go to a bigger time frame. And then we want to see where we have 2 candlesticks that are of the same color going in the same direction. And the third candle that is going to come up, it's likely going to be of the same direction, right? And if we go on with this market how it did, it is likely that this market went to the upside. So you can see here, this market created another 2 candles going to the upside. But we managed to catch this trend because on a higher time frame, we saw that these were 2 very strong green candles. So the third candle that is going to come up is likely going to be green. But instead of just placing a trade because we see a green candle, we can go to lower time frames and we can analyze and see if this chart is likely going into green or is likely to go into red. So let me explain a little bit again so that you can really understand this. So to make sure that you really understand this, I'm going to use this example on a daily time frame. So this is exactly what I do whenever I get into the market. So let's say I get into the market on this day, right? The first thing that I ask myself is, what is likely going to be the trend for today so that I know if I'm going to be placing buys or sells. So what do I know? How do I know this? The first thing that you can do is go into the market and go to a daily time frame and then see what is the daily time frame doing. So if I look into this daily time frame, I can see that the last 3 candles that I get here was bullish candlesticks because they were green, right? So we have 1, 2, and then this little one here. So the 4th candle here is likely going to be green. And if this 4th candle is green, right, that means the trend for the whole of today should be going to the upside. Because remember, this green candle shows us that the buyers are in control. So if the buyers were in control yesterday, because the last candle that we are going to see is going to be for yesterday, right? And if this last candle was green, the next candle that is going to come up is also likely going to be green, but I don't know how long it is going to be. But actually, I know that the trend is likely going to also be of the same direction. So what do I do here? So what I do for me personally is I mark this zone where we are right now, and then I'm expecting to get another candle which is at least of the same size, right? So I'm just gonna mark again right here, right? So this is the zone that I think the market should go, right? So this is the zone that I think the market is going to spend time. So if I mark this, this is going to be 73 pips. So you can see right here, it's going to be 73 pips. So if today's market is going to be to the upside, I need to catch at least up to 70 pips because this market is going to likely go to the upside. Why? Because the past candle was green. This was green, and I'm expecting another green. So if it is another green, the market is going to go to the upside. But I don't just buy on this time frame and say, okay, I'm buying here like this. No. What I do here is I go to the lower time frame. So I marked my zones here, and then now what I can do is I can go to a 1 hour time frame or a 5-minute time frame or 15-minute time frame. So let's start off by the 1 hour. So on the 1 hour time frame, we still have our zone here, but you can see that we have a huge green candle here. So look at this, a huge green candle, right? So the market moved here on the 1 hour, and we have a huge green candle. We're expecting prices to go to the upside, right? You can also even go to the, so you can see here is a clear uptrend. The market from here is going to the uptrend, and we can also go to the 5-minute time frame, and you can see that this market from here, right, from this point right here to where it is clearly moving, going to the upside, right? But we managed to see this because we managed to say, okay, the daily time frame was also in a uptrend because we saw two huge green candles. So the market is likely to keep to the upside, but I'm not placing a trade yet here. You can place a trade as a breakout. We are going to talk more about that. We can mark out this zone, and then if the market breaks up here, we buy, right? We are going to talk about the breakout strategy. But for now, just understand that this market is likely to push to the upside. Why? Because we're already in a uptrend, and our daily time frame we have confirmed here. So if the market breaks here, so this was going to be our buy trade, and we are expecting prices to keep moving to the upside. It's not going to happen always, but if you really understand how the connection of this daily time frame and this 1 hour time frame works, it's going to be easy. Because what happens is the 1 hour creates the daily creates the weekly creates the hourly. For example, there is 60 minutes in 1 hour, so we need 60 candlesticks of 1 minute time frame to get a 1 hour time frame. So all these candlesticks are going to be combined, because since it takes 60 minutes, we are going to have 60 candlesticks of 1 minute time frame to get one candlestick of a 1 hour time frame. So in this case, you can see the market pushed all the way up and go 73 pips in profits. If you were trading this, you could have catch 73 pips. That can be $73. That can be $730. That can be $7.30 depending on your account size. But first, you need to be able to identify the trade. So as I said, these lessons are going to be long, and some of them are going to be a little bit boring, but you need to understand this. The first way of identifying the trend is seeing the candlesticks of higher time frames. That's the easiest way. The next way that you can use, which is what we are going to be using also a lot of the times, is using price action. So what is price action? Price action is simply the opening, the close, the high, and the low. But what if we combine many candlesticks, right? When you combine many candlesticks, we are going to get a market which looks like this. So whenever you look into the market, you are going to see this. First, we are going to have what is called an impulsive move. It moves like this. We are going to just say this is E. And then we have what is called a pullback. We are going to say this is PB, right? Once we have an impulsive move, a pullback, what makes a trend is if another impulsive comes and breaks above this zone, this is going to be a new impulsive move. And then we have another pullback, another impulsive move, right? And it goes like this. So the way that this is created is basically because of buyers and sellers. So when we have the market pushing to the upside like this, it means buyers are in control and they are pushing prices to the upside. And when we have the market reverse right here, it means we have more sellers that are coming into the market. And these sellers that are coming into the market, they are pushing prices to the lower side. And also there might be buyers here who are taking their profits. Remember in the beginning we said, if you want to make profits in the market, you are going to need to be able to buy low and sell high. So if you had bought right here and then you sold right here, you will become a seller, and also you make money with this pull, with this move right here. So now once we get this pullback, right, we have sellers in control, but these sellers are also going to take profits, and also buyers are going to come into the market at some point, and then they will push prices to the upside. And when they push prices to the upside, we want to take note of this zone right here, and then we have another pullback. And then if we get another pullback, we take note of this zone right here. So this zone here is called a higher high, and this is called a lower high, and this is called again a higher high. And if it pushes up again to break here, this is called a lower high. So this is how you identify a trend. It's not easy for you to identify it in a real market. So I'm going to jump into the real market, and I'm going to show you how to identify the trend in a real market, right? So let's look at this market right here, and let's start off, let's say right here. When you look into this market, you are going to see, I want you to pay attention and see how I create these trends, right? Now, first, we want to see an impulsive move. It can be going to the upside or to the downside. So an impulsive move is a group of candles that are going strongly in one direction before we see a pullback, right? So for example, we can see the market pushes all the way down to this point, creating what is called a lower low. And then the market reverses up, right? When the market reverses up here, we don't know yet because we don't have this part here. We are still here. We don't know if this market is going to go to the downside or it's going to go to the upside, right? So we have a lower low, and then we have a pullback. So this is our impulsive move. This is our pullback, PB, right? So now once you see this, you want to pay attention to this zone. This is the zone that is going to determine if this is going to be a downtrend or not. If the market moves and breaks past this, it means we are continuing the downtrend, and it creates what is called a higher low. Now, it goes to this zone and it starts to pull back right here. Whatever happens here doesn't concern you. All you are waiting for is for the market to come back down and break this lower low. That's how you confirm that this is a continuation trend. And if it does, pulls to the downside and breaks past this zone, we create a higher low and then a lower low. That's how you create a strategy. That's how you read a trend. So now we can see that we can say this market is going to the downside, and we can see that clearly by being able to draw and understand trends, right? Let me make this point clear. Let's say you are looking into the market, and the first thing that so now before we move forward to the next way of identifying the trend, I want you to really understand this. The trend is going to be determined by higher highs and higher lows. So in textbooks, they'll just tell you that the market is going to move like this. But in reality, the market might move like this. So we have all these zones that are disturbing us, where we cannot see what is going on. So for you to really understand this, you need to be able to you really need to be able to read the trend with some rules. So here's the rules that I use myself. Let's say the market is going to the upside, right? It makes a big impulsive move and a pullback. Once I see the first impulsive move and a pullback, the 2 points that I need to take care or that I need to think of is number one, this point right here, which is the pullback point. And then now, whatever happens here doesn't concern me. If the market doesn't break this zone, we are not yet confirmed to be in an uptrend, right? But if the market by any chance goes and break past this zone, remember our zone is here. So this is our higher high. If the market goes and breaks, once the market goes and breaks above the higher high, this is now a confirmed uptrend, right? And once I get that, I also mark this. I'm going to mark this green, right? And I'm going to say this is my lower high. So now from this point, if the market, so since the market break here, right, even if you start doing this, this is still in an uptrend until if it goes and break below the lower high. That I will say this is no longer an uptrend, all right? Now, since this market is in a pullback, what is the next, the other zone that I need to mark is this one. This is my new higher high. But it's not confirmed yet because the market haven't broken it, right? So if this market is moving like this, and then it doesn't break below here, and then by chance it goes up and break above the higher high, what does this mean? This means we are now in a new higher high. And we have a new lower high here. So it's a lower high. Or it's a higher low, whatever it is. I always confuse these names. So if this market do whatever it does right here, and it doesn't break below this higher low, I'm still in an uptrend. And now once I get a pullback, a reasonable pullback of like 3 candles, I have a new higher high. And I'm waiting for the market. So if this market by any chance goes down here and breaks below this zone just like this, I'm no longer in an uptrend because my lower high have been breached. But if it doesn't, if it goes to the upside and goes all the way to break here, we are still in an uptrend. That's how you read a trend effectively. So let me show you how to do that in the real market. And then once we do that, we can move on to the next lesson where we talk about support and resistance, areas of value. And I'm going to teach you how to place your first trade, the first strategy that you are going to use.